Note 4. Interest earned on investment amounted to 161590 for the year and is included in other expenses. Look at this, you need to read. Now, interest earned, immediately we know that this should be on the face of our cash flow statement. And they indicate to us, but this amount is included in our other expenses. Therefore, we need to take this out. First, I'm going to transfer this to the face because this is my easy marks. Interest received, interest earned, 161590, right? Then I need to take this out. Now, when you look at this, they've indicated to us that it is included in our other expenses. Therefore, if you have your expense minus an income, it will decrease your expense. Therefore, we now need to increase the expense, and I will add this back. I know it's a negative, but our expense will increase with that amount. Remember, I prefer to include my negatives and my positives in my receipts, negatives in the paid account. Then the next sentence, they indicate to us, included in finance cost is an amount of 157,300, which was still outstanding at year end. Therefore, this is non-cash. We need to take this out, and this should be included in our trade payables. On the face of our cash flow statement, we have our interest paid included in our finance cost. Therefore, this is non-cash. We need to take this out, and our net amount will be an amount of, I've already included my negative, 118,360, and include in my trade payables, when you look at the credit side of calculation 15, finance charges 157,300, and we're able to tick off note number 4. Note 5. Disco Limited classified plant with a carrying amount of 85800 as held for sale on 31 December 2022. This was the only asset classified as such by the group. Now, we know that the difference between our carrying amount, 85800, and our fair value, which is now the non-current asset held for sale, if you look at our statement of financial position, 79200. This difference is an impairment. This is non-cash. We need to take this out. But first, we will have to take out the amount from our PPE, and then we're able to take out the impairment. Now, if you look at your plant and equipment, identify on the credit side that I have included the 85800. On the debit side, please identify for me the FCTR. Remember, they've indicated to us that the FCTR relates to the plant of hip hop. Therefore, I've included the amount on the debit side, which is the total. Okay, sorry, let me get back to our non-current asset held for sale. We need to take it out, and then in our other expenses, we need to take out our impairment. Now, when you look at the last bullet point for me, we have our carrying amount of 85800. Our non-current asset held for sale, the lower our fair value, less cost to sell and carrying amount, which will then be the 79200. And we will have to take out an impairment amount of 6600. Right, therefore we are able to tick off note 5. Note 6. The only companies in the group that own land is Disco and Rock Limited, a subsidiary in which Disco Limited has an 80% interest and control over. Both these companies revalued their land during the 2022 financial year. The land of Rock increased in value with 99,000. Now remember, this amount is your before tax amount. Therefore, if the land increase, we will debit our land with the 99,000. we will credit our revaluation surplus with the 99,000. We will debit our revaluation surplus and credit our deferred tax with the 99,000 times 80% times tax rate 28%. The deferred tax, when you look at the right side, will be an amount of 22,176. Right, okay, now bear with me. We need to include this in our deferred tax. Therefore, when you look at our deferred tax of ROC on the credit side, 22,176, right? But take this one step back. We need to perform our reconciliation of T account of our land. Therefore, we need to transfer the 99,000 to our land. Our land will increase on the debit side. Therefore, on the debit side, include, this is a reval, and this is in terms of ROC. And this is the 99,000, right? Now, do we need to complete our revaluation surplus account? Yes, because we will have to determine the balancing figure. Now, in terms of our revaluation surplus, if you look at my T account, we need to calculate the net effect of the 99,000 minus the 22,176. And this will be an amount of 76,824. But important, only 80% of this will be included in our revaluation surplus because our parent only owns 80%. Okay, therefore, when you look at the left side, imagine that this is your analysis of owner's equity. Remember, we include the revaluation surplus, we have a total column, we have our parents column and our NCI's column. Now, our parents column, 80% will represent an amount of 61,459. Therefore, we will have to transfer 61,459 to our revaluation surplus. And this will be included on the credit side. Therefore, this relates to ROC, and this is an amount of 61,459. And remember, we will still have an amount relating to disco as well, which we need to calculate. And I'm going to call this my calculation. Let's say C2 point, I think I still have C2.2. Let's just say C2.4. C2.4, right. Okay. Then I need to transfer my NCI's portion as well, 15,365. If I look at my NCI, this will be included on the credit side. Therefore, my NCI, 15,365, and this relates to a revaluation surplus of ROC. Now, next, they've indicated to us both these companies revalued their land. We now need to determine what is the value of Disco's portion. But how do we do this? What is the value of Disco's portion? We know that our revaluation surplus will only consist out of ROC and out of Disco. You with me? Therefore, if we are able to identify the portion relating to Disco, we will be able to identify all of our other legs of this transaction. But how do we calculate the portion relating to Disco? Only looking at this now, guys, this is our NCI's profit or loss, not the revaluation. Therefore, this should be at the bottom, profit or loss, 206,800. Apologies. Right. Okay, so now we need to determine what is our revaluation surplus in terms of Disco. Right, we are able to calculate the balancing figure relating to Disco, 10041. Now, take this one step back. Think about your journals. We will debit our land, credit revaluation surplus, debit revaluation surplus, credit our deferred tax. Therefore, this difference here 10041 will be an after-tax amount. Therefore, we now need to calculate what is the tax and what is the before-tax amount. Please look at the left side of your screen for me, please. Therefore, we have 10041, which is our after-tax. Our tax amount will be the amount times 80% times 28%. Therefore, let's say that we need to calculate x. Now we have x minus x times 80% times 28, and this will be 10041. Therefore, we are able to calculate x, and x will represent an amount of 12939. This is our before tax amount. And the difference, which will be an amount of 2839, will be our CGT. Therefore, if we now transfer our before tax amount, this relates to our land. Our land will increase with it 12939, and this relates to the revaluation of Disco. And this is 12939. We need to reference our calculation. Just want to obtain this. This is calculation 11.1. 11.1. Right. And we need to transfer our deferred tax portion. We transfer our deferred tax portion, also calculation 11.1. And this relates to Disco, the revail, and this is the 2898. If we look at 11 on the left side, 2839, and I've included here 39. Is it a 3 or a 9? Sorry guys, it's a 9. I've highlighted mine on my prints, and this is the reason. 2838, and let me just correct this one here. 2839, 2838. Okay, rounding, it's okay. Right, and when we refer back to Disco, we are now able to tick off note 6. Right, we have now worked through all of the info. We've transferred the amounts by means of indicating our tick marks that we have done so. Now, if you do have time left in a question, briefly just quickly scan through your info, identify that you have ticked off all of your amounts to ensure that you've completed your answer. Then my next step is I need to complete my cash flow statement template. But to be able to do this, I need to complete my T accounts. Now, very important from a timing point of view, I want you to identify my T accounts need to balance. Now, you will identify, for example, if you look at land, I've included the totals on the debit and the credit side. But please, 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 do not do this in the test. I just do this for you to be able to understand the meaning by balancing. Use your calculator. Look at the debit side. You're able to identify if you add the debit minus the credit that there will be a balance. And that is what you do. You calculate the balance, and you move on. Right. Now, first, I want us to have a look at our statement of cash flows. I'm going to work through this from the top. I need to complete my cash received from customers and my cash paid to suppliers. Therefore, if I refer to my calculation 1 and calculation 2, I know that I need to obtain my trade receivables movement, and I need to obtain my trade payables and my inventory movement. Therefore, let's have a look at these T accounts. I've already balanced them to save us some recording time. If you look at calculation 6 for me, trade receivables, the balancing figure for this T account to balance will be on the debit side. Therefore, if you think about this, if we debit our trade receivables, we credit our bank. If we credit our bank, this will be a decrease, 974,820. Let's transfer this, 974,820 820, and this is a decrease.